Greetings, members one and all of the Salivation Nation. $4,300 silver. The debt clock marches on. Let's explore. That's right, the debt clock as a measure of time marches on with silver cranking out to new highs now. We did see it actually scale back a bit. The debt clock ticked backwards for a while, but it didn't take long for it to catch back up. And more than likely, it will continue to press forward, but with some corrections. The data gathered by this website, usdebtclock.org, some people don't necessarily buy into all these numbers, but when you take into account that how they source the information here with the money supply, and this is how this is measured, people often mistakenly think that this means that silver should be priced at $4,300 per ounce. But in reality, it just as it says on the label here, this is the dollar to silver ratio as of right now. And what that is a measure of, as you can see here at the top of your screen, the year-over-year increase in the U.S. M2 money supply divided by the yearly world production of silver in ounces. And really what this is telling us, just like it tells us with many other factors that are ticking across your screen right now at a very high speed of rate, is how much money is being created and how much debt is being created. So let's look back and take a look here and see exactly what this means. The U.S. national debt is now $27,258,000,000 or billion and 79,750,000,000, 60, 90, 800. Well, it's going up. It's going crazy. The debt per citizen is $82,444, and the debt per taxpayer is 2018 $218,452. And it's crazy. But in all of this, what causes debt? Well, U.S. federal budget deficit spending. The U.S. federal spending and budget deficit increasing. These numbers increase. That's going to cause this number to go up. And when you take a look and account, when you measure the U.S. federal debt to GDP ratio, you can see at other times during a history, and these snapshots tell us what this debt to GDP ratio was. In 1960, it was 52%. In 1980, it was 34%. In 2000, it was 55.59%. Now, it's broken, shattered all those other numbers by more than double at 128.16%. And so, yes, that's the debt GDP ratio, which means that we are in trouble, folks, as a nation. But the thing is that with the dollar being what it is, as the top world reserve currency, how long can we sustain this deficit spending and national debt? Well, by any measure that we've seen, especially when you measure it by previous presidential administrations, the previous two, well, let's take a look. Under George W. Bush, the national debt was increased by more than all 42 presidents before him combined under President George W. Bush. And that was at the beginning of the financial crisis. Under Barack Obama, for the deficit spending under his administration over his two terms, the national debt increased more than the previous 43 presidents before him. And so there you go. We're on a trend, and it's not slowing down under the first term of President Trump. Now, we may or may not see a new president. There has been, as discussed in the media, we're not sure. By some accounts, other accounts are sure that there's going to be a new presidential administration. We shall see. But under any account, one thing we do know and can agree on is that the debt is going to continue to increase, and federal spending is going to continue to increase no matter who the president is. And so this is something that is explosive. But as we see this spending, well, that means that these numbers are going to increase in terms of the dollar to oil ratio, which is something else that should be paid attention to, because in a sense, in some way, we are under the remnants of what is known as the Petro Dollar, which is what Henry Kissinger set us up with in 1973, that essentially kind of saved the dollar after the gold window was closed by President Richard M. Nixon. That was done in August of 1971. So this is another way to measure $109.26 per barrel of oil. That's how many dollars are produced by the yearly output of oil production in barrels. What is oil trading at now? Well, it's at some in the 20s, 30s. I don't know exactly where it is now, but there was a time when oil was trading in the negative $35, $39. Silver to gold is that dollar to silver ratio now with these dollars printed. And this tells us, with oil, they can only produce so much. And with silver, they can only produce so much. The amount of silver taken out of the ground compared to the amount of money printed per year, well, there's a big difference. And there's a record difference right now. And to me, that tells us that these commodities, especially if you look at them even as just commodities and don't take into account how silver can be seen as hibernating money and as a wealth preservation tool, well, the dollar, in comparison to how many of those are printed, the dilution of the money supply is the illustration here. And that silver is probably inclined to go up in price. In other words, it will maintain its value no matter how many dollars are printed, and more than likely that that value will be realized in future price movements in the upward trajectory. And so this video is not about silver necessarily being $4,300 per ounce, but it is the ratio of how many dollars are printed per ounce of silver each year. Now we also see that as well to the dollar to gold ratio as well. Same figure here. But I think it's quite interesting to see. Another thing is the paper to silver ratio. This is something that would be very interesting to explore. 177.51 to 1. This is the number of paper silver ounces traded on the major world silver exchanges divided by the actual world production of silver in ounces. In a way, that's kind of set apart from the monetary supply, but in a sense, what's created digitally or on paper, so to speak, because there's no restrictions, well, they do want to have some silver to back up those contracts, but this is measured by silver exchanges, and the USGS tells us there's a lot more paper silver out there than there is the silver to back it up. But how is it tested? Well, some people say that people are demanding more physical these days, and there's been a scare about getting the physical to be able to meet the demands of those requiring it, especially for gold. But look at that. There's 88.08 paper gold contracts to 1 ounce of silver or of gold there out there. So I think that is something to take into account, and essentially means that it looks like they're taking more advantage of the silver market. So in any case of manipulation, this would be it, because they're manipulating more of these shares than the physical ounces to back it up. That happens in every commodity. So very, very interesting indeed to see where this is. But this number here is quite alarming. We've seen that happen in the past, where this number certainly increases and over time, but it has been known to backpedal a bit. And it would be nice to see what this looks like in previous sessions. Of course, we have these things where we can go back in time here, but it doesn't tell us what that U.S. Debt silver to the dollar, that ratio there whenever we go back. Now, if we go forward in 4 years, let's see, when we go into the future, it does calculate it. And it gives us another number here. Let's first take a look at the debt. The U.S. national debt is $48 trillion, $48.4 trillion in. A massive increase is what they are forecasting here for where this is going to go in time. And with that being said, this number here, $10,202 per ounce, is really a fairly small number in my mind, it seems. Compared to where we were at before, obviously it's more than double what we're seeing right now, 4,300. But nonetheless, that is where it is. Fascinating indeed, where it could be, what's forecast in the future, and this is measuring based off the current rates. So it's very interesting indeed to see where silver and gold are going. But we've seen it really spike up quite dramatically over the last few years here, the debt. And I think as this number increases, we're going to just see more and more of this other stuff go on. But how long can it go? That's how long can this system keep going? And my guess is it'll keep going as long as people have faith in the dollar. And not just, and when I say people, I'm talking about the whole world. I'm talking about every entity from you and me on the ground here in the United States to foreign governments who transact in the dollar to the IMF and what have you. Now, you may know that they are actively working out in the open now for some sort of monetary reset. And we've seen some folks have eyebrow-raising statements, such as the Prime Minister of Canada has said as of late that this is an opportune time with the coronavirus to do a currency reset to help equalize things in the world. And really, it's basically based off of modern monetary theory is what they're going to probably be developing this. And I've talked about this in prior videos, but this new reset calculated off of modern monetary theory. But modern monetary theory is not really modern at all. It's utilizing ancient old ideas based off of Keynesian philosophy. And, essentially it's not going to be good. But you know what? No matter what they do with the financial system, when you and I hold gold and silver, well, that protects us. In a sense, we're taking our wealth outside of that system. And I think that's why this paper to silver ratio number is so important, because if you buy the electronic versions of silver, there's nothing wrong with that. It is a way to be able to hedge yourself in a marketplace to a degree, but it's a way that you can do it without taking physical. There's no really promise that you're going to be able to get that. And obviously the way that is derived is by the good delivery bars, which I believe are 1,000 ounces. So your best bet is to have a little bit of silver on the side if you're going to delve in those markets. And typically that's what happens in this community. Everybody that I know that has delved into the paper silver markets or the ETFs and like SLV and the others, well, they have physical as well. And I think it's always good to protect yourself with recognizable bullion, such as the American Silver Eagle, such as the Canadian Maple Leaf, and other very common, highly liquid silver products out there. And physical silver in your hand is empowering because it essentially separates you from at least that portion of your wealth from the being at the mercy of whatever happens with the revaluation of the dollar or the monetary system in general. And I think that should hopefully encourage you if you are thinking about accumulating silver. I think it's a good time where the prices are now, and understanding the fundamentals and how to accumulate and what have you as an insurance policy. Gold, silver, or gold are not going to make you wealthy or rich, but whatever wealth you do have, it shall preserve it over the course of the long term. And that's what it's about. So there you have it. So this is a video, and I encourage you actually, as you watch this video, at the tail end of this video, to check out the playlist about that has other top videos where I've documented the the U.S. debt clock numbers for the silver for the dollar to silver ratio. And it's very interesting to see where it was. That is kind of your archive as you look back through that playlist of videos to see where it was in previous times. It's fascinating indeed. So I hope you found this video useful. And it just goes to show you it's an alarming rate how our debt is being accumulated here. In the course of this video, maybe you have checked and see how far the debt has risen just during the time of this video. People have noted that in the previous videos that I've done on this topic, and I'm not actually calculated. Maybe I'll do that on the next one, in this series here. But make no mistake, whatever time has gone by, I would love to be able to earn that amount of money in a lifetime. Would be very nice in many cases, but nonetheless, there you have it. So post your thoughts in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe. And I'm going to ask you to do one other thing, and that is to hit the bell notification. They don't always work, but it does help, because many times some of these videos don't get out to your subscription feeds or what have you. So those who are interested to keep up with the latest, I do post videos on a daily basis. So there you go. Multitude of gratitude to you all.